Hey guys, welcome to another episode of the Texas Blockcast. I'm thrilled to be here with Zach Bradford, the CEO of CleanSpark. Thanks for coming on the show.
Hey, thanks for having me, Lee.
So, Zach, you guys have been on a tear recently. And I think the first thing I'm excited to talk about that, but the first thing I want to dive into a little bit is your background, CleanSpark's background as a company prior to becoming one of the largest Bitcoin mining companies in the world.
Yeah, so my background, I actually have a background in finance. I have a CPA, but co-founded the company 10 years ago, actually in 2014. And we were working on a waste to energy project and, had been building on that. We're looking for some avenues forward. And we found actually a military project at a remote base where they were looking to take basically beetle kill pine, so trees that the beetles had killed, and turn it into a source of power instead of running power lines. I think it was like 40 miles they were going to have to run power lines. And in that process, we got introduced to this group of software guys that would have helped make the whole system work. Um, they ran into some financial hardships, and we actually joined forces. That's really where the name CleanSpark came from.
Hmm.
And we built on that, really got into the microgrid space where we were doing renewable grids, largely for data centers and large commercial properties. And one of the things about the renewable energy space, it's hard for it to ever make sense on a dollars and cents basis unless you have a resiliency concern like the military, or if you have a lot of incentives.
Hmm.
So I was, really impressed when I went out and I visited a data center early 2020 in Atlanta, Georgia, where I didn't know it showing up, but they were mining Bitcoin. And to really understand how, you can take power and immediately convert it into something of value, and that it actually can incentivize building of new generation renewables, things like that. And, I have to say at the time, I was a huge Bitcoin skeptic. I'd known people that had bought into it. I'd known people that made money, lost money. It just seemed like this, funny little widget of the internet, right? And, pandemic happens a little bit later, and of course, I had some time, and so really went down the rabbit hole. Got orange pilled, and by the time the fall came around, I went to the board and said, "Hey, we shouldn't, build a power system for this data center. We should buy the data center." Um, and the rest is history. Since then, we have 8 data centers across 2 states. We just announced 2 more that we're going to be building in Wyoming, which we're super excited about. And we actually sold the energy business, and so we take an energy first approach with our background. Um, and Bitcoin is really where it's at, and we've spent the last 4 years building it to where it is today. So happy to dig into any part of that you want to dig into.
So you mentioned the Wyoming opportunity. I know you guys are building in Mississippi, got massive amount of hash rate in Georgia, and I think that's behind nuclear. Is that correct, or is it another form of renewables over there?
So yeah, it's nuclear power. So the carbon-free aspect is what did attract us to Atlanta, or sorry, into the Atlanta region. Of course, in Georgia, we've since expanded out, but high nuclear concentration. They actually just turned on another reactor,
Hmm.
and so there's a ton of carbon-free power. But also with all that base load power, it makes the power very cheap in the area. But we are grid connected. We're not, behind the meter anywhere. Having been in the microgrid space, it was about creating resiliency for buildings. We consider ourselves partially in the macro grid space. We're providing resiliency for the grid.
Yeah.
Now, the interesting thing about Georgia compared to states like Texas or otherwise, there's very few incentives for, Bitcoin miners. And so we really operate on where we're proving our value. And we think on a long-term basis, incentives will be developed. But, we're part of emergency response programs is the only, incentive that we have in Georgia. But I think we're making a ton of headway representing the ability for Bitcoin miners to provide value. Because when you realize that some of these groups, are talking about, hey, if we have a big heat wave, how are we going to handle rolling blackouts? Our conversation with them is, hey, when you have a heat wave, just tell us to turn down, and we turn down. And like, for example, one utility we operate in, they can gain over 350 megawatts of power back into their grid because of how we run and function. So, it's been a journey, but that is what attracted us to Nevada. Back to your point in the beginning was the low carbon emissions that grid has.
Now, do you guys run a hedge strategy in those states, or are you on index?
We are, exposed to the market, and we like it that way because, again, our background in the software space was to be able to, be there or not be there with when the markets make sense. It's also really the best for the grid. If we
Yeah.
just stuck and we're on flat and there was a need for us to go up or down, usually you get the indication from economic indicators, right? Power prices go up, it means that there's demand is rising, so we're able to then we can disappear. So we just strictly follow the economic curves, but they of course match really from a grid strain point of view. So we don't hedge any power, we follow it very closely. We have the ability to hedge our power, but we've outperformed the hedges available for every month for a little over a year and a half. So we feel very comfortable with our strategy without the need to dump a bunch of capital into a financial hedge.
That makes sense. It's very expensive, a lot of collateral required, and they end up performing the same strategy. They just sell back the
Yeah.
hedge whenever they're curtailing. I have noticed that the point at which they curtail is higher than the index players. I think they're less, like you said, they're a little less sensitive, a little less price sensitive. Of course, they have an opportunity cost of not selling back if the price goes to $1,000 a megawatt hour or something.
Yeah.
But that seems to be the more prevalent strategy, is to go unhedged, just especially since you need all that capital to build infrastructure and you don't want to tie it up in collateral.
Yeah, you have to look at every project as it has a cost to, get there. One of the things I'm most proud of is that we have used less capital to arrive at the point we are today, compared to some of the peers. But part of that is because of the just sheer amount of capital you have to stuff away into a fund to basically backstop the financial instruments that are in place to control the power price. We
Hmm.
would rather keep that on our balance sheet and ride the wave.
Okay, so yeah, obviously we've been the CleanSpark's been a member of the TBC for some time. We've talked years ago about, how the market wasn't really recognizing what CleanSpark was doing, and that's changed in a big way over the last year. And we've witnessed, I think, analysts, the market, investors in general, really taking stock of what you guys have done and rewarding you for it. And just curious to know from your perspective, what has been the main driver of that change? What was lacking before, and then now what? It's almost like people's scales have fallen off people's eyes, and they've seen you guys operate, and y'all have just been climbing the ranks.
Yeah, what you said was it's about operating. So, there's a lot of narratives and stories that can be told, and then there's where the rubber meets the road, actually performing. We have amongst the highest uptime of any operator. Part of that is because we do follow, of course, our own energy strategy, so we're not forced to curtail or anything like that from, some groups are.
Hmm.
But it was this. We always knew that what we were doing was worthwhile. But I think that, if you go back to early 21, one of the first speeches or at an event I gave at a conference was it was actually called The Last Kid on the Bus. And what I was talking about when I gave it, because it was right before the first real spike in Bitcoin, where it ran from like 10,000 to 40,000 in like 30 days.
Hmm.
I said, I think we're the last large scale group that can get on with some sort of cost benefit involved, where we were already public, but we, had perspective. We saw the gaps and the things that were available, and we grew at our own speed. We weren't worrying about rushing into any project just to create some massive headline. We didn't buy machines when others chose to buy machines. So we've always been counter cyclical, and we, have grown in the bear markets, and, hopefully in this next bull market, but also in the prior bull, we just kept our heads down And we, unpopularly, we sold all of our Bitcoin when we felt like the market reached euphoria 2 years ago. Going back to June of last year, we said we're going to hold all of our Bitcoin. And it was funny, it was almost like a lot of the others started doing the opposite. And so we have a very large Bitcoin holdings because we believe in the trajectory it's going in. And again, there's going to be a point in time where it's going to be unpopular, but we will sell a chunk of that Bitcoin to, on a non-dilutive basis, fund additional growth in the next bear market. Hopefully we'll sell, closer to the peak. But, doing things the opposite way was not getting us credit. Now, I think that the credit's being given is you have hindsight. Rather than us saying, hey, this is what we're going to do, we really try and spend our time saying, hey, look at what we did. And we're going to try and repeat that as we continue to grow. I think the other thing that we do is we look at every day very stoically, and we don't try and underestimate what it is. Today's a new day. And so the behavior that we took, about whether it's a growth strategy, a hodl strategy, anything like that, we're willing to, and we speak about this publicly, but we're willing to change it tomorrow if the market conditions change or if a different opportunity presents itself. It's about going our own way. We haven't tried to mimic anybody, or we haven't tried to do anything like that. That's ultimately allowed us to grow the right way at the right time. So like you said, by being rewarded, we have the second highest market cap of the publicly traded miners. And right now we're producing, bouncing back and forth between the second and third highest producer of Bitcoin on a monthly basis.
Incredible. And you mentioned something that made me think about um, the recent ETF approvals created sort of a unique dynamic, whereas MicroStrategy and some public miners were acting sort of as a proxy for Bitcoin, and ETF exposure opportunities sort of have thrown a wrench into that dynamic. Obviously, we can't talk about it like individual stocks, but from a general perspective, what do you think about that development? Were you anticipating that, or was that kind of a surprise?
No, I think we anticipated it. But it's interesting. It's how we've never looked at ourselves as a proxy for Bitcoin. I think everybody
You're an
should own.
operator.
Yeah, we're operators. Somebody should buy Bitcoin. If they don't want to buy Bitcoin and they want direct exposure, you can buy the ETFs. But operators are there, if you really step back and look at it. We're here because it's the only place that you can get exposure to or buy Bitcoin at lower than spot. Um, because again, if you want to, perform the same as Bitcoin, you should buy Bitcoin or the ETFs, right? If you want to try and get some beta off of it, then miners are the place to go. For example, we've outperformed Bitcoin this year. I think we're the only miner that's outperformed Bitcoin, actually. But that's the opportunity in miners, is if the right miner producing Bitcoin at lower than Bitcoin's value, and then allowing that to either appreciate or even sell to cover costs, things like that. That's the opportunity, is about the superior ability to acquire Bitcoin. Even MicroStrategy, right? They're still acquiring at a spot. They can time it well. They can do things strategically, but it's one thing and one thing only. Miners are unique in that way. So I think miners should be measured on their value to mine Bitcoin and the cost at which they mine Bitcoin. And the bigger that spread, the more value that it offers to its shareholders to return things to the bottom line. Because again, ultimately, if we're not returning value to the shareholders, then what's the point, right? And sure, we can hold a ton of Bitcoin and get general value appreciation, but there's so much more that can happen in that gap.
Yeah, and I'm thinking back to the graphics that I saw last week. I don't know if it was CoinShares or one of the analysts put it out, where it's a graph that shows by width the number of Bitcoin, and by height, I guess then on the y-axis is the price at which each miner produces Bitcoin. I'm sure you've seen the same graphics.
Yeah.
And you guys are pretty wide on the x-axis, and you're pretty far to the left on the y-axis. So I think there might have only been one or two miners that had a lower price of mining Bitcoin than CleanSpark. Is that accurate?
That would be accurate. Yeah. Now, the key thing on that, so again, we find ourselves amongst the lowest, but we are the lowest amongst miners at scale. I think scale is something that is vastly underrated and overlooked because if I can mine Bitcoin at a low cost, but then it's not enough margin to cover all my overhead, then what was the point? So
Yeah.
I think that
Yeah.
there's two metrics. One is your direct cost to mine, and then the next one is what's my all-in cost to mine,
Yeah.
including everything that went into it. You know, you can unpopularly, you can throw depreciation and things like that in there, which is the cost it took you to build your facilities. Um, and we still end up amongst the very best on that side. And our goal is to stay in that position. You know, we could grow just to grow, but growing the right way on a low cost basis that's truly sustainable from a value proposition, we think is be really important. I also think miners that lack scale, again, unpopular opinion, because it will lead to a little bit less diversity, at least in the public company side. I think there's less companies than we start of the year with by the time we get to the end, because if you can't pay your own way, investors are no longer going to invest in the proxy. They're going to invest in miners that produce value, and valuations will start to reflect that. And so I think there's going to be a big consolidation, not just in meaning M&A, because some of them are just never going to be acquired. Maybe their assets will, but I think capital will consolidate. So bigger miners will get bigger, and by being bigger, they will then be able to get even bigger because capital will flow in that direction. Now, I think that points to a very, important thing, which is you can't underestimate the value of a private miner, right? The ability to have 5 megawatts, out by the barn, I think is a big deal and really important for the network. And I think it's going to always be an important part of the ecosystem. It's just not something I think you're going to see a lot of investment flow to, especially with public companies.
Yeah, yeah. I mean, I think I agree. And I also think it's not as much of a hot take as you think, because there are so many private miners out there that a little bit of M&A and consolidation amongst the public miners is negligible from a, diversity perspective or decentralization perspective. Um, so on that thread, are you seeing the possibility of uh, public companies, some of the smaller public companies being acquired, or is it more, sort of the big companies acquiring small private miners, or maybe big private miners doing sort of a reverse merger, jumping onto a underperforming public miner?
I think all of the above, but I think something that's important to understand, I guess, is like ease, right? The private miners are always going to be easier to acquire. There's so many less hoops to jump through. You don't need shareholder votes, things like that. So
Yeah.
I think for a public miner like ourselves, that's always first prize. It's going to be lower costs simply by less attorneys being involved. And there's usually more value and there's usually less overhead, right? Because to be a public company, there's a ton of overhead. You
Mm.
have lawyers, everywhere. You have, audits, you have, you name it. Um, it takes a lot to basically get that ship up and moving. And then as you get bigger and bigger, the costs seem to scale with it a little bit. I
A
would
lot
even
of
say,
G&A, a lot of back office.
I would say the cost to be a publicly traded company on NASDAQ probably approaches between 30 and $40 million. And a lot of that is in professional fees to keep it going. And so when you have a private miner that doesn't have all of that, that you're able to absorb, now that we've already covered all those costs, it becomes very additive. When you then instead go to a public miner who has that also, the, the benefit potentially is you get to eliminate all of it. The problem for that group is that's also very difficult. They have to unentangle themselves from all these things, and it's then hard to kind of bolt on. So we refer to it sometimes as tuck-in acquisitions, which is the private ones, where you're just able to bolt it on, you make sure you have a culture fit, and away you go. So it doesn't mean that it won't happen. I think it's just going to happen slower for public miners to acquire other public miners. What I would do if I was some of the small public miners myself, I'd combine forces. It takes the same cost to run the public company, but 3 or 4 of the small guys get together, they can suddenly be amongst the list of larger miners. But again, I think that the political navigation to make that happen, and the cultural navigation makes that very, very hard to pull off. And so I think that you're going to see more private miner acquisitions happening. Then you're going to see asset purchases from small public miners who basically don't make it, whether it's a bankruptcy or they decide to, spin off the assets and go do something else. But I think it's going to be a very interesting 12 to 18 months ahead of us.
Yeah, and so I guess the theory is that the pain brought on by the halving creates a necessity for this kind of thing, because we haven't really seen a lot of it, because everybody's, even in a bear market, everybody's still generally profitable, at least close enough to where they can hold on. And you may not be able to speak to this, but if you could say 3 or 4 private miners that you've seen that are really good operators, that you think the public miners are looking at, what would you say those are?
So, it comes down to this. Actually, what we're interested in is the mining sites where they didn't make it. They maybe were running old machines and they've got a great data center, and now they have a silent mine, right? There's nothing worse than a Bitcoin mine that's not mining, where you can see shelves full of old equipment. And the good thing for those private miners is that means they squeezed every dollar out of those miners, and they probably ended up better off at the back end of it. But now they have a choice. They can either reinvest, make a massive investment in the latest, greatest miners, or they can exit and we can step in. We have a huge pipeline of miners coming in, and we would step in and take over those empty shelves. For us, that's a trait we're looking for. The next thing that we look for, if it is somebody that's running, is they have to have high quality machines. If you want to get the premium for what you're operating at with the machines you have to have the latest and greatest. Otherwise, we are left with a situation, or all miners are left with a situation, where they're going to have to pay for those machines and hope that they can sell them out the door to create space for the better miners on the back end. And so, honestly, a blank slate, really good data center is first prize. And because the other thing too is, a big argument for, if you're selling a business, is that you bring with you something extra, expertise, for example. Well, if a public miner is buying your facility, they already have the expertise. So there's no premium for experience. There is no customer list like you would have in a traditional business. So it does become very black and white, almost a little boring on how the valuation sheet works out. Does it have the ROI that it needs to have for everybody? So unfortunately, that's the reality with the private miners is, that's what we're looking for. I would also add the last thing is the ability to expand. Somebody that has, a smaller mine, but they are holding a piece of paper from the utility that says, hey, if you do X and Y, you can expand by this much. That's what we did in Wyoming, right? 2 sites, 45 megawatts and 30 megawatts, but they're set up to be expanded. So that's a big deal, because it means that it's not a one and done, but it gives a pipeline for additional growth, and also, deeper relationships with the utilities.
Okay, so switching gears a little bit here, as we think about kind of efficiency and what you guys have done. Y'all obviously made a very intentional decision to bring on Taylor Monig and pivot a little bit into immersion and direct-to-chip cooling. How has your thinking been on that lately? Are you still thinking immersion, single phase, dual phase?
Yeah, so for any of your listeners who don't know Taylor is the former COO of TMG Core, built a great tank for immersion cooling, single phase. Got a huge background in that. Now he's been with us for a little while. We just announced him being named the CTO, but I think he's approaching 2 years with us now, and so he's already been instrumental in our record-breaking uptime and really building and leading the teams as we expand. So well experienced in air and immersion, and so we're approaching this for what is the right answer, not what is the coolest science project. And I think that there's a lot of ways to make headlines with, the latest, greatest widget. The reality is if it's not cost effective to produce Bitcoin, then there's no point, right?
Yeah.
Now, the benefits of immersion can't be understated. Your machines last longer, they have more flexibility in their operating capacity. Now, the downsides, it takes a little bit of extra power. You're running pumps and things like that. So you have to make sure that that power input into pumps and the cost of the fluid and everything else balances itself out. What we're really excited about is we believe that the industry has finally reached a point where we can actually build immersion mining for about the same cost as air cooled, a high quality air cooled site, not to be confused with, just the lowest cost things out there. The way that we build that will lead to high uptime. And so we're really looking at it from an environmental point of view, meaning, is this environment going to be conducive to air cooled? Is it going to be more conducive to immersion cooling? So for the first time ever, it's not, hey, let's spend more money on immersion for some long-term output. We think we can put them on an equal playing field. So we do want to do a lot more immersion cooling in the future.
Probably not in Wyoming, right?
Yeah, so Wyoming creates an interesting opportunity because the air is so cool. Why go that route?
Yeah.
Well, snow. So you think of how you have to battle snow during parts of the year, high winds, snow. The high winds, of course, break wind energy, but that means you have snowbanks and things that, hey, is that going to, clog up your inputs or your outputs or things like that? So we're approaching this really from a blank slate every single site we go to. Which one do we want to work better? Texas, perfect opportunity to really double down on immersion, right? Wyoming, if we can figure out a different solution for the snow, which we have, of course, some ideas. Air's the easiest and obvious answer. But again, if the cost the same, why not go immersion cooling, right? It's quieter. There's a lot of benefits to it. So I would say, realistically, though, next 6 months growth, probably a lot of air. And then really from, next year and beyond, probably a lot of immersion cooling. So again, we don't want it to be any claims about, oh, this one's better than the other. Hey, what's the output? What's the cost?
Yeah.
And that's the right answer, no matter how cool it looks at the conference or anything else. The other thing I will say is we are focused. There's a lot of talk about between, single or two-phase immersion. We're single. Now, Taylor has experience in both. The cost to do single is usually so cost prohibitive that it just never pays off. In addition, getting the fluid you need is a lot tougher, and the fluid is volatile. And I'll just put it bluntly, it doesn't meet our safety requirements right now. And so it's, single phase, it's non-toxic, it's, you can even get biodegradable single phase. There's all these good things about it that makes it really easy to work with. Two-phase comes with completely different set of parameters and safety concerns and things like that. So we're 100% focused on a single phase path, and we think it's more cost effective and safer for our employees and everybody around us.
I'm hearing a little bit about like direct to chip cooling. I don't know if that's, and I guess that's probably more water based. But another thing that I typically ask, and feel free to respond to either of these questions, but another thing that I typically ask CEOs of mining companies is, and especially in the last 6 months or so, is there's the AI boom has two different routes in my mind in mining. One is miners are talking about hosting, some NVIDIA GPUs, right? That's one route. And some people say, well, the data centers are different. You need to, there's too much adjustment. It's too cost prohibitive. Then the other concept is, well, if some of these AI companies are willing to write really big checks and they just have an appetite for data center space, and more so power, interconnections, utility agreements, where they'll buy greenfield sites, like take the Wyoming site, for example. What if they paid you 25% more for that site? Just because their appetite for, the miners almost staked out the stakes first over the last 4 years. And now all this expansion with the hyperscalers, it's not really cloud, it's more like inference and model training, it just needs to explode. We've seen all the statistics saying that AI compute usage is going to 4x over the next couple of years. It's going to be, like 11% of US power by 2035. What do you think either of those is an accurate description of what's happening right now or will happen in the next, 12 months? Or do you think it's a little bit of both?
Yeah, so a lot of ways to take this. So first things first, I think that you're right. Bitcoin miners have really paved the way. We've staked out the pockets of power. Now, there still are pockets of power, but these AI data center companies and also, of course, the big names that everybody knows, they've spun up huge power teams over the past 6, 7 months to go find those places. Now, the difference is they take years to build. So you approach utility and you say, hey, in 3 or 4 years, I want to have this data center and I want this much power. Compare yourself to a Bitcoin miner says, hey, if you have the power, I'm going to use it and I'll have my facility ready in 6 to 9 months. It's a better prospect for the utility. And then when you say, oh, and by the way, we can help you load manage. We're the kind of load a utility actually wants. Now, there's still going to be a need for this other type of compute. Now, there's a lot of conversation that I think is just headlines. So, we're going to diversify into this type of compute or that type of compute to be more diverse. We're going to stay focused. We're going to be the best Bitcoin miners out there, and we expect that that will come with the reward. I will say our loads will become more valuable every year. An overlooked thing, an analyst actually recently published a report, but I agree with, and we've been talking about it for a long time on our side, is the loads that we have contracts for and access to will become more and more valuable. Sure, there could be somebody that's willing to write a massive check to take us off the board, but it's not something we would necessarily be interested in because it's not only more valuable from a direct financial prospect from, big company A, but it's also now the grid is probably less stable because there's now this power that runs 24/7, 365, right? You can't turn off a traditional data center in the way you can Bitcoin mining. I believe that they're going to have to create incentives in every state for Bitcoin miners to really help them load manage because we're going to be such large loads and the ability to be flexible is going to be important when they're going to lose flexibility. Now, what I will say, because you guys are, of course, an important voice in the Bitcoin mining space, I think we're going to get blamed. You heard it from me. Bitcoin miners have already been getting blamed for some of the power problems, but we're going to be the really easy scapegoat for traditional data centers when a traditional data center wants to move into an area that is already maybe it's light on generation, but it's in a key market that they want to have an impact on, right? They are going to be the ones that go and try and get, formerly mothballed plants turned back on. It's not going to be the Bitcoin miners. And so I think that we're going to find ourselves with a situation where it's going to be really important to, make sure our voice is known and heard, that how flexible we are, the types of power that we prioritize, because again, we have a smaller lobby than traditional data centers are going to have. We're being asked to report to the EIA. Traditional data centers don't report in the same way. There's a voluntary mechanism that nobody reports into for them, right? So we're going to find that it is going to be really important to defend this industry, defend its value. I think that Bitcoin, and I'm sure most of your listeners are, since they're listening to this podcast, the utility of Bitcoin is worth so much more to society than selfies or Chat GPT writing somebody's book report. Not saying that this technology doesn't have value, but the ability to impact people worldwide is what Bitcoin is for. And so I think we need to set ourselves up knowing that this wave is coming, this wave of opinions, and it's a really easy scapegoat when you look at the political environment as it exists today.
I love that. Yeah, because you're talking about the value proposition. It's a little subjective, but then you have very objective value in grid management, grid resiliency. And, to get a little bit granular, I think some listeners will be familiar with some of these concepts, but the way that miners are managing loads is getting better. And I think that's underappreciated by the general public. It's certainly underappreciated by the media. But the granularity of curtailment and the communication between the utility and the miner, or in ERCOT's case, the miner, the Queasy, and the grid operator, since we have a little bit different of an arrangement here, is improving. And I don't know how it is in Southeastern ISO or out in the West, but in ERCOT and PJM and some other markets, there was a concern that Bitcoin miners were almost too fast, that dropping off that much load and being that responsive without a mechanism for ERCOT understanding how that load was going to drop was going to create a frequency issue, and similar in PJM. But I think, that's a good problem to have, one. And two, we're seeing more communication, and we need to see better communication still. We still have a long way to go. But when those two things meet up, I've always said this, like Bitcoin miners are to the grid on the demand side what batteries are on the supply side.
Yeah.
And, we've accomplished our goals when Bitcoin mining is as viewed by the general public, or at least by grid operators and utilities, as an effective tool similar to batteries. So from a frequency response perspective, maybe we don't get there from frequency response just because batteries are almost like purpose built for that. But from a load balancing and sort of a backup, a capacitor, if you will, perspective, I think we're a couple years out from being there. But batteries are still so cost prohibitive that we have a little bit of time to do that. And you're absolutely right. The media narratives have put us at a disadvantage, and we are a target, and especially for traditional data centers that are used to working in the shadows, and they don't necessarily need to have their voices heard in the public, but they can behind closed doors, and they're very influential behind those doors. We need to be ready, and we saw that in Texas, right? There was a bill that was pushed by some traditional loads that were unhappy with how Bitcoin miners were more efficient in the ancillary services markets, bidding down the price, taking away some of the alpha that they used to have. And nobody in the media talked about how, well, Bitcoin miners are actually lowering the price for consumers in the ancillary services market because they're bidding lower, and they're creating efficiencies there. That was not the topic in the media at all. So very much appreciative of you voicing that, and of you. I know you're on various programs, both Bitcoin media and traditional media. And so having leaders like you that understand that nuance and can voice that is very important. So as we wrap up here, where would you send people, or what's sort of the resource or the documents that you're sending people to learn more about y'all's expansion? Of course, obviously these are all public documents. Maybe it is, your SEC filings, but where are you sending people to learn more about CleanSpark?
If you want to really, slog through some reading, it's the SEC filings. But no, our website. We've really tried to make the website very user friendly, keep things in summary format. So I'd send everybody the website, and then from there, we have a pretty decent social media presence where we try and make sure everything's well known. But yeah, if you want to learn more about CleanSpark, please check out our website, cleanspark.com, and
And your handles?
It's Zach K. Bradford on Twitter. And so, I will tell you, I'm not a huge social media person, finding myself a little too busy, but I will throw some things out there every once in a while. So, and hopefully I can engage with some of your audience.
That's awesome. Yeah, I'm similar. I don't tend to tweet like once a day, and everybody on my team is like, you gotta tweet more than that.
Yeah, I hear it all the time. You got to get out there more.
I know.
And if I could find myself some extra time in a day, I would.
Zach, thanks for coming on the podcast, and we're looking forward to the next 12 to 18 months, seeing you guys continue this meteoric rise. Congratulations, I think, are in order. And yeah, we'll catch you on the next one.
Okay, appreciate it. Thanks for having me today.